Alright guys, so I'm currently away for a week and this is a scheduled video that I just rushed out. I'll be back on Sunday, but this topic just can't wait. We must talk about Germany and the awful state in which things have evolved. It's a mixture of horrible economic policies, the push to go green, and geopolitics hitting the Germans all at once. Volkswagen, for example, is on the brink of closing down factories on German soil. By 2026, Volkswagen needs to achieve a 6.5% margin in their business. However, in 2024, we will be 3 times below that, hitting only 2.1%. It's really easy to trace the genesis of the problem. Not enough cars are being sold. Why? Because prices are just too high. And why are prices going up? Because of the inputs, the raw materials, and the energy cost way too much. Other manufacturers like the US and China are much more competitive. Now, the relevance of this is very immense. If you're a German industrial player, you'll want to exit the country to stay afloat because behind your business are thousands of jobs on the line and you have to stay competitive. 4 in 10 German manufacturers are looking to move abroad, and that's based on just energy costs alone. Sentiment is at its lowest for more than a decade. And now that Trump is coming back, Germany could get pulled into a global tariff war. At least 10% import tax could be slapped on German products entering the US, which is the biggest consumer market in the world. So margins could get hammered even further, and this is horrible for Germany, which desperately needs investment coming into the country. They are way behind the 8 ball in electric vehicles, and China just dropped another big bombshell. SVOLT, a Chinese battery giant, has confirmed the termination of their projects in Germany. The company is pulling out. And the reason is very straightforward. The development of the EU EV market has failed to meet expectations. And how could it? Germany has cut away EV subsidies and people in the EU they have less money to spend. Up to $4 billion in investments would disappear from thin air. And that of course means more jobs gone, revenue and technology that won't enter the German economy. Let's not forget the EU tariffs on Chinese EVs. That has been confirmed earlier this month and it would effectively shut Chinese vehicles out of the common market. Recall how punitive the import taxes are. SAIC is getting clobbered with a 35% tariff, Geely at nearly 19%, and BYD at 17%. This is on top of the existing rate of 10%. Even if Chinese EVs continue to enter Europe, profit margins are going to be squeezed. And because of this, the incentive of investing in the EU have been trashed. The Chinese government is really hesitant with companies moving production to Europe. They have told companies like BYD to keep Chinese technology in-house. The only incentive to build a factory and share expertise is money. If the margins make sense, companies they will set up shop and do business in Europe. Before the tariffs, China expected Europe to be a huge market for their exports. As the US moved to decouple from the Chinese economy, at least the Europeans would be a source of business. According to forecasts, Chinese exports would grab an enormous amount of market share in the EU. By 2025, it would be close to 15%, and by 2027, more than 20% of all electric cars will be imported from China. If this trajectory continued, other EV-related industries would naturally flow along as well. The most important of which would be companies that manufacture batteries. And that's the most important part of an electric vehicle. Everything else like the body kit can be done in-house using existing German technology. But who's the world leader in battery technology? It's China. The entire battery supply chain is dominated by either Chinese companies or firms partnering with them. And if you're the Germans or the EU, Chinese battery companies refusing to set up a factory is a big problem. Take the Volkswagen ID4 EV for example. It's a German car, but the battery is from the Chinese giant CATL. The vehicle costs around $37,000, but the battery alone accounts for 8,700 of the total cost. 24% of the price tag comes from the EV battery. CATL has also paused their plans to expand production. This is an economic tragedy that stems from politics. As a Chinese company, there's no point building out your supply chains in Europe. Demand for EVs in the bloc is collapsing. If costs are just so high in the EU, it will be impossible to manufacture and export it to other buyers around the world or fit them in your own cars back in China. The only reason to build a battery factory in Germany or any other EU country is to get around the tariffs, but that also depends on domestic demand there if it's high enough to be worth it. In August, German EV sales plunged by an incredible 69%. The downtrend started way back in January 2024 when the Germans stopped all EV subsidies. In other words, the German market for electric vehicles is naturally contracting. That was before the EU tariffs even started. It's clear why SVOLT and CATL are leaving. Business is simply shrinking. So Germany is caught in an economic trap. Europe is caught in a manufacturing crisis. Unless they can figure out the energy equation, there's very little hope left of an industrial U-turn. And it's quite bad when you have Macron panicking after the US elections. He kind of knows that Europe is cornered. In a roundabout way, he's telling Europe to break free.
Et donc, c'est un moment de l'histoire pour nous, Européens, qui est décisif. Au fond, la question qui nous est posée, voulons-nous lire l'histoire écrite par d'autres, les guerres lancées par Vladimir Poutine, les élections américaines, les choix faits par les Chinois en termes technologiques ou commerciaux, ou est-ce qu'on veut écrire l'histoire? Si on se réveille et qu'on décide au fond de ne pas disparaître géopolitiquement et de ne pas être le marché d'ajustement des autres puissances économiquement et commercialement. Et donc pour moi, ce moment, c'est celui où on décide d'agir, de défendre nos intérêts nationaux et européens en même temps, de croire dans notre souveraineté, notre autonomie stratégique, et de dire au fond, on n'a pas envie simplement d'être des clients.
Even if Harris won the elections, the situation for Europe would just be as dire, but Trump just flips the entire economic game. Now that he's coming back in 2025, US energy policy is going to change. The emphasis would swing back to higher oil and gas production. Renewable energy, well, it's going to take a back seat. And understand what this means. Donald Trump would increase the supply of energy, so power costs would drop and US manufacturing would get even cheaper versus Europe. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to investing in gold and silver, I trust Indigo Precious Metals in Singapore. They have made buying precious metals safe, fast, and easy for investors, whether you're making small purchases or large-scale investments. With gold prices steadily rising, ensuring you buy authentic gold at competitive prices is crucial. And as inflation shows no sign of slowing down, precious metals continue to be a reliable store of value. Whether you're purchasing by the ounce, the kilo, or saving up by the gram, Indigo Precious Metals helps you maximize your investment no matter your budget. The best part, you can test your coins or bars on site, giving you complete peace of mind. As a leading retailer and bullion dealer in Singapore for gold, silver, and platinum, they are your go-to source. If you're considering your first gold, silver, or platinum purchase, there's no better place to begin than Indigo Precious Metals. For this month only, you can get a 100-ounce silver bar at less than 3% premium. Stocks are limited. So if you're looking to buy silver, this is a great promotion to really consider. And with my code Sean Fu, enjoy a further discount on your first purchase. So start building your gold and silver stack today. Oil production will likely rise back year on year. Trump could roll back the environmental regulations and expand federal land leases. So more oil companies like Exxon or Chevron could start up new fracking projects. During his last presidency, US oil production increased by nearly 50%. Production went up again even during Biden's term, and this would be a nightmare for Europe. If Donald Trump continues to pump more oil, the cost of production for US companies will fall relative to Europe. And once you understand this, you'll realize why Macron is freaking out. On one hand, China controls global EV supply chains. The critical inputs are tightly controlled and can be cut off. And on the other hand, the US is ramping up energy production. And that's why we are seeing a wave of political chaos across Europe. And that's why the German government is starting to collapse. And it's all because of one input that even Brussels can't ignore. And that is the cost of energy. Looking at the global cost of power, we can see why Germany is in crisis. Their political stance has turned the economy virtually uncompetitive versus other countries. Last year, German power cost over $250 per megawatt hour, the second highest just below the UK. The rest of the EU countries, France and Italy, they are near the top as well. US power prices were well below $100. China is right at the bottom with the cheapest cost of energy. They are paying only $60 or $70 per megawatt hour. It's a big reason why the German government is in chaos. Scholz has fired his finance minister Christian Lindner. As a result, the German coalition has collapsed and a snap election is coming in March. Scholz, he wants to spend more money on all sorts of things and adventures, from giving Ukraine even more funding to investing in all sorts of renewable technology like hydrogen. But Linda is a fiscal conservative. He would rather take any excess money to pay his own existing debt to reduce Germany's financial burden. So one side has to give way eventually, and the writing was on the wall. However, it's actually Germany's economic situation that's pushed the government to fracture. If the Germans they were all making money hand over fist, Scholz will be the hero and everyone will be happy. But that's not happening. It's very likely in the upcoming elections the SPD will lose even more support. And what's funny is the economy minister Habeck is back on Twitter. He might even be running against Scholz. So it's crisis after crisis for the Germans. Their political policies have backfired on the German economy, and as a result, the economy is now breaking apart the coalition in Germany. At the heart of this problem is a 650 billion euro exodus of money. No one wants to invest in Germany, and as a result, capital is flowing out. The situation is only going to get worse with Donald Trump in office. Remember the leverage the US has in the form of the dollar. They can always outraise money and dish out incredible subsidies versus what Germany can offer. Germany is simply too broke to fight back. In addition, operating costs are sky high, so it's a double whammy for the Germans. German direct investments abroad over the last 3 years have far exceeded foreign money coming into the country. As a result, we have at least 80 billion euros a year leaving the country. As foreign capital leaves, this results in more job losses and less tech expertise flowing into the economy. It's a crisis that Germany needs to resolve. The outflow could accelerate even further during a Trump presidency. Now, we've talked many times about how the energy crisis benefits China. Beijing gets to buy cheap Russian gas. That part is mighty obvious. But the bigger winner might actually be the US. Energy sales from the EU is flying up, and going forward, it could even increase. Von der Leyen has just revealed her game plan.
I would not say discuss, but we touched upon yesterday. It's the whole topic of LNG. We still get a lot of LNG via Russia, from Russia. And why not replace it by American LNG, which is cheaper for us and brings down our energy prices, but is something where we can get into a discussion, also what our trade deficit is concerned. So engage, look at common interest, and then negotiate.
Now, how US LNG is cheaper than Russia, I have no idea, it's beyond me. Might be the sanctions. However, her speech tells you which G7 economy stands to win. The US economy is going to win big at the expense of Europe. So people see these and they are investing accordingly, and this is why we are seeing US stocks being on a tear. So Germany is in panic mode. Whoever forms the new government in March will still face the same crisis, and it's all about cheap energy for the Germans. But let me know what you think. Can Germany turn this ship around? And will Scholz still be Chancellor in 2025? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.